Welcome back to Real Vision. I'm Ash Bennington. It's my pleasure today to welcome a fan favorite back to Real Vision, Mish Schneider, Chief Strategist at Market Gauge. By the way, if you want to find out more about Mish's incredible work, head over to marketgauge.com. That's Gauge. Mish, welcome back to Real Vision. Always a pleasure to have you with us.
Thank you so much, Ash. It's always a pleasure to be here. I have been totally honored and grateful for the support I've gotten from Real Vision for years and years now. My start with the company being interviewed was in 2018. So yeah, we've got some history here.
We've got some history indeed, and we're honored and grateful to have you always when you join us on the show. We should say, by the way, we're filming here at 11 a.m. Eastern Time on Wednesday, April 2nd. This obviously a moment of uncertainty, I guess is the most balanced way to say it, and what's happening in markets today. President Trump announcing at the White House at 4 p.m. Eastern Time today what the White House has styled Liberation Day. The implication being that today is the day that they're going to be the official position given on tariffs, trade policy, and maybe some other announcements. Who knows, at 4 p.m. Eastern Time here in about 5 hours or so. So this is the context for where we are right now. With all that said, Mish, talk a little bit about how you see what's happening in markets right now.
Well, Ash, you used the word uncertainty, and clearly that is the case. I have seen today by Walter Bloomberg a post that came out on X, and it put all of the different forecasts of all these different economists from different banks and different hedge funds. And they're all, some people think this is, the nail in the coffin. Other things think that this is a great buy opportunity. And that's the level of uncertainty, I think, that's really perplexing a lot of investors. People especially who were just so used to buying the dip are getting hurt, particularly if they keep buying the dip in the tech stocks, which are still really underperforming in this market right now. So that's number one. But number two is what we really have to do is wait for how the market, since it's forward thinking, eventually absorbs this uncertainty and resolves. What does the market think tariffs are going to be? Is it going to be a positive or it's going to be a negative? And that's just one area of the market that's uncertain right now. And that, I think, puts us in a different place than we've been in other periods, just looking at this century, of corrections. 2000, 2001, we had the dot-com, we had then we had 9/11, of course, and then we had the malfeasance of the CEOs with Enron. 2008, we had the mortgages. 2011, we had the government shutdown. 2020, we had COVID. 2022, we had aggressive hikes from interest rates. But now you can't just point to tariffs. That's just one thing. And that's what makes the uncertainty palpable for people right now.
Oh, that's so well said, Mission. And obviously, this is very much true. There is clearly a lot happening right now. Trade policy, monetary policy, fiscal policy, regulatory policy, all of it seems to be on the table right now. And we talk about this moment of maximal uncertainty. And yet, of course, there are still some clear trends that have emerged in terms of the directionality that this administration has been pointing. Whether you love President Trump or hate him, very clearly he has a view about the world, and he's been signaling it very strongly in terms of the general overall direction that he believes the U.S. economy should be headed. So with all that said, let's talk about what you've seen. I know you've got some charts that you brought with us in terms of price levels, in terms of general trends in risk asset prices, and your broader positioning in this market.
Well, yeah, and you certainly don't need to emphasize the uncertainty. What you want from me and what I want from myself is clarity in the uncertainty. And that's where I go back to my roots, Ash, and that's really going to be in the technical analysis. And what I have found to be extremely interesting is the different time frames and then where the different sectors are in the economy right now and on the price chart. So I gave you just one chart. I mean, I could show a million, but I think this one chart kind of says it all. So, I look at the daily, I look at the weekly, and I also look at the monthly. And I like to use the monthly because it's the biggest way to step back and plan. So I'm not sure if we're going to put that chart up right now.
There it is.
There it is. Okay, cool. So this is the 23 and 80-month moving averages of two what I believe are the key sectors to understand what's going to turn out in this market, right? So the first one is XRT. So I have my economic modern family. I've been talking about that for years and years and years. And they have been so helpful this year more than ever. Always helpful, but this year it's been at a different level.
By the way, for those who don't know the ticker, this is the Spider S&P Retail ETF.
Exactly. And that what I call granny, because the consumer, obviously, if you want to measure how things are absorbed and resolved in the market and in the economy, you have to watch what the consumer is doing. And as people were calling for very bullish moves back in the end of January, beginning of February, and this year, I watched the consumer sector on a daily chart start to break down. And so I thought to myself, consumers not buying this roseate picture. What's so interesting about this monthly chart is if you look at the 23-month, I like to look at it in terms of business cycles, right? And I'm no economist. I always say this. I'm more of a speculator in the market using these business cycles to make stories, or what I'm saying now is the prices dictating the narrative. And we can see that in XRT, it's under the 23-month, which is about a 2-year business cycle. Now, that's where the stag comes in from the stagflation. We're not in recession because we can have that dip, but if you look at that blue line, the slope is still positive, right? So it's sort of a weak sell-off at this point. But it's very interesting because if we can move back up over that 23-month, I would get totally optimistic. I don't care what people are saying. To me, that would signal the consumer has relaxed and is coming back into the market. On the other side is the semiconductors. Also,
let me just say real quick for people who don't have these numbers in front of them in terms of percentage changes, just to get a sense of what's happening with the Spider S&P Retail ETF. First, let's talk about trailing 12 month down about 7%. Year to date, down approximately 11% since January 1. That is, well, it speaks for itself.
exactly. And we know that the inflation expectations, obviously what happens with monetary policy, we've seen weak retail sales. There's been more buying in the staples, but consumer discretionary has not been all that great. Over the week, we've seen the buying in XRT come in a little bit, which is hopeful, but a lot of it has to do with the tariffs on cars. So people like Carvana and O'Reilly, if you look at that stock, it made new all-time highs. So you have to, it's nuanced, but it's a good general reflection of the consumer. On the other side is the semiconductors. So that peaked in July. And that's why I was very, very concerned when I was listening to mainstream media constantly tell people, just keep buying the dip, just keep buying the dip. Oh, the Mag 7, NVIDIA in particular, Mag 1 people were calling it, making all these projections to 250. As I'm watching this peak in semiconductors, I'm thinking to myself, I was going on media and people were saying, what do you think of NVIDIA? I'm like, I wouldn't buy it. If anything, we got out. And so now, though, let's forget about all of that. I think what concerns me the most is where this is sitting. It's sitting on the 23-month. The last time semiconductors was on the 23-month was 2 years ago in 2023. And then it took off from there and had that nice move in 2023, 2024 into the peak in July. If that breaks down, and that level's around 205, by the way, SMH, if you want to put a number on it, if that breaks down, I'm not saying that there won't be pockets of the market that can still outperform, but it will be really hard for people to stay positive in the face of tech breaking down. And so we have to see, I think, one of three scenarios here. And this, to me, simplifies everything. Number one is if XRT can get back over that 23 months, semiconductors, all it has to do is hang out. Number two is if semiconductors start to rally from here, holding this major support for whatever reason, we don't know, but it doesn't matter. Price dictates the narrative. Then we will see the consumer coming back in with some confidence that tech is going to save the day. Number three is semiconductors break down and it doesn't really matter what retail does. That starts to really shake the confidence or retail continues to break down, and that also shakes the confidence. So you can see the two of them, I think, are very symbiotic.
Really interesting. Just a little bit of context here. This is SMH. By the way, if you're over 22, that's internet slang for shaking my head. Uh, Van Eck Semiconductors ETF year to date minus approximately 13.5%. And by the way, for some additional color, if you look at the trailing 60-month chart, 60, up approximately 280%. This has been just the sector that's been just red hot, driven by NVIDIA and a few others.
Yeah, and I think NVIDIA from the peak is down like 38%. Am I right about that, Ash? It's a lot.
It's a lot. It's a lot. It has not been pleasant. But when you look at the trailing 5-year chart on NVIDIA, it was a rocket ship.
Right. So, and we can leave this topic because there's so many other things to talk about. But the last thing I'm going to say about this is just watch these two sectors. Really, I think that's going to help a lot. Now, that doesn't mean that every single thing will go down in tandem or single thing will rally in tandem, but it does at least give you a great idea of the macro without having to listen to too many analysts who are so differed right now in terms of their forecasts.
Yeah, by the way, NVDA, it is off, down approximately 21% year to date. Here's a fun one just because the number's easy. Trailing 60-month, 5-year chart, it's up approximately 1,700%.
Wow. Wow. Yeah. Well, yeah. Right. Exactly. But we're in the present right now. We're trying to think going forward. So,
And such is the nature of markets. Thank you for being up 1,700%. I'm interested in what you're going to do tomorrow. By the way, Mish, I want to give you a compliment here, just to say, first of all, obviously, during these times of well, I guess we could call it narrative politely, a lot of emotion around the way people are looking at markets, thinking about all of this, markets, geopolitics. You pick your poison in terms of where there's a lot of passion. But price always cuts through. There's always a chart. There's always a price. And one of the things that I appreciate about you, Mish, is that when you bring two charts, you have been looking at hundreds, probably thousands of charts in the last 30 days, but to distill it down, to find the 2 points and to say, hey, guys, these are the two places where you should be paying attention because I think it represents something broader in terms of trend, in terms of consumer sentiment, in terms of broader macroeconomic trends. It's just nice to distill it down and make it that crisp and clean.
thank you, Ash. Yeah, well, that's been my job, right? I have a background in special education, so it's modifying the curriculum, if you will, to the most salient factors so that everyone can access that information. That's my purpose in life, I think. So, but just to move on a little bit here, I know that this is a very cryptocurrency audience. So in my notes I sent to you, I did not cover that. So I just want to say a word about that because I was looking at the chart in Bitcoin. I look at the chart all the time. And you're right, I look at thousands of charts. But if you look at the chart of Bitcoin right now, it's another one of those uncertain areas. You could say it's holding up pretty well, all things considered. But you can also say that the next direction is going to be so defining. If we can get through 90,000, I think that would be a real big positive. But if we break down under 80,000, we can make the case, and I should have given you a chart, but for this massive head and shoulders top, which would not be pretty. So this is just another area that people are still trying to figure out. I think we talked about it being a tween in my economic modern family, still trying to figure out what it wants to be when it grows up relative to the U.S. economy. And I don't think we really yet know that answer, but that's why I'm watching that very carefully too. Is it a risk asset or is it going to depart from the rest of the economy?
Yeah, and indeed the global economy. Boy, I don't have the numbers ready, so I'm just gonna eyeball it going off the charts myself. But basically, the 52-week high on Bitcoin is about 106,000 USD. 52-week low, it's in the low 50s. I can't exactly pick it. I don't have the data, but I'm looking at it on a chart. It's like 53,000. I mean, this is if you don't have a stomach for volatility, Bitcoin is not the place for you.
Yeah, and we were talking before the show. I did buy a smidgen of Coinbase this actually yesterday on the close, and it's holding so far. So I watch a lot of things that seem to work in tandem. I'm looking at Bitcoin. I started out this year thinking that the altcoins would be more interesting, and they were for the first couple of months. But now that we're into April, I'm starting to look at it the opposite way. I'm starting to think that Bitcoin is really going to be back to the leader, if you will, of what happens with the rest of the altcoins, and also an impact on what happens to the rest of the market. Like I said, either it's a risk asset, or it breaks apart. And we don't know that. And obviously, if you talk to Micah Saylor, we know what he thinks.
Yeah, and what it is and what it may become. It has certainly performed like a risk asset in terms of the correlation with the Nasdaq 100, or choose your risk asset index there. But obviously, there are those who believe in the longer term that it becomes a hedge against inflation, against central bank debasement of currencies globally. That's the thesis. Obviously, we haven't seen that play out yet in the longer term. That's the way folks feel about it. It's really interesting. The cyclicality in terms of the altcoin season, when you look at BDI, the Bitcoin Dominance Index, the relative percentage of market capitalization Bitcoin represents in the digital asset space. Although I should say there's a lot of crap at the bottom of those charts, so you can always sort of question how true an index that is. But let me ask you this, and this is interesting to me. When you obviously talk about Bitcoin, you say that you put on added a little bit to your position on Coinbase. I'm curious, how do you think about the relationship of Bitcoin and Coinbase when you come in? Obviously, clearly correlated, but how do you think about that? How much of that was driven by, for example, the financial data over at Coinbase, management decisions, et cetera, versus that as a proxy for the underlying price of Bitcoin?
I actually think more the latter than the former. Again, I have a Coinbase wallet. So excuse me. A lot of this is just based on my own personal activity in the cryptocurrency world. And so last year, Coinbase really took off. I mean, literally, I had bought it at $80 and watched it go all the way up to 260. And I haven't touched it since I got out of that position, while even Bitcoin went up. So you could say the reverse happened, where Bitcoin started to actually really be more dominant in terms of its impact to what Coinbase was doing. But now I'm looking at Coinbase more as, like a stock, actually, as opposed to Bitcoin, like you just said so eloquently. We really don't know what the future of it is. But Coinbase has expanded beyond Bitcoin a little bit. I know you can trade metals in Coinbase. I think they've made some good adjustments. But really, my decision, if you want to know the truth, was based on technical. I thought 160 would be a really good low point. It got down to 163 recently. When yesterday it cleared the most recent low and closed above that level, which was at around 174, I thought, let me nibble. And I'm wrong if it breaks back down under that 163. And it's really that simple. So I bought a very small position. I have my risk point in there. And if it starts to gain some traction and the market calms down and Bitcoin doesn't fall apart, then I'll add. So you can see it's not so cut and dry in my brain how the relationships line up.
Yeah. Just a little side point here, because I find it interesting, and I think you might find it interesting as well, Mish, as well as our viewers and our listeners. Obviously, we're having this conversation here on Real Vision. Yesterday, I had a conversation on Real Vision Pro Crypto with a gentleman named Andre Kronia, who's a developer and he's just an interesting guy. He trained as a lawyer in South Africa, decided he wanted to become a programmer, wound up like teaching electrical engineering and computer programming at his university, and he's sometimes referred to as the father of DeFi, the godfather of DeFi. This is a really smart guy in terms of the technology side of what's happening over in DeFi development. And listen, you may agree or disagree with the project he's working on. You may be bullish, you may be bearish, but it's an interesting conversation if folks are interested in having that perspective on markets, just to hear a really brilliant guy talking about his view of the development of the space from a technological perspective. And basically what he's saying, and he goes really deep into the weeds in this crypto conversation about what he sees from a technical perspective. But the 50,000 foot view is what these guys are working on. The people who are really like deep in the weeds, writing the code for the next generation of these digital assets. they're talking about dramatically doing a couple of things. Well, first, dramatically increasing the number of transactions per second that you can execute. And they were talking about the technology that they were working on being in the range of 50 to 60,000 TPS, transactions per second. By the way, this is roughly on par with the Visa network, just to give you a little bit of context on how fast this is. Bitcoin, which is a store of value asset, the idea is a kind of a digital gold, a way to store value off the grid, not correlated to central bank assets. That's the theory, as we said earlier, but very slow, a couple hundred transactions per second at best. Talking about doing 50,000 transactions per second and finding ways to onboard people that don't involve having a wallet, which is something that you mentioned, Mish. The idea that if you're a gamer, and God knows if you know any young men or teenage boys, they're just addicted to gaming, right? They're constantly playing gaming. Finding ways of being able to onboard people into the crypto community without actually having to get a wallet. You just start playing your game, and suddenly the wallet is integrated into that experience. Now, look, as I said, you can be bullish or bearish on any particular technology, but the point, and this is the interesting one, is that the development is very much ongoing. These folks are thinking about what's coming next in the crypto space, in the digital asset space. Any one asset, may succeed or fail. Any one technology may succeed or fail. God knows we've had rug pulls and scams and all that kind of stuff. But it's just fascinating to me that it is not a static thing. These folks are just developing full speed ahead, foot on the accelerator.
Well, that's great. By the way, did he say anything about blockchain? Because that's something that I've been watching BLOK. I had a position in it. We've been flat, but I've been trying to figure out what's the best time to buy it.
He didn't actually talk about pricing at all. This was
just blockchain technology in general.
Yeah. And clearly, as you say, Mish, very, very passionate about blockchain technology.
Well, I think I totally agree. Long term, I really do believe in Bitcoin and the whole cryptocurrency space and DeFi and all of that. I really do. And so that's fascinating to me. And it brings up in my mind all the hype that's gone on with AI and technology and NVIDIA and how fast things are developing and growing. And yet, as we know, things cycle out. Sorry, this happens every time I'm on with Real Vision. They never bark, and then all of a sudden they bark. And one of my dogs is named Raul.
Oh my gosh! Pick up Raul. Pick up Raul. I want to see his face.
You want to see Raul? Raul, come
Absolutely.
here. Come here. No, that's William. Come here, Raul. I have two of them here. Anyway, sorry about that. Let's go back to the topic. So what I'm saying is that all this development that's happening, is it going to be impacted by a CHIPS Act? Is it going to be impacted by China? Is it going to be impacted by tariffs? And my uneducated answer, based on what you're just telling me about this Andre person, right? Andre, was that his name? Is that no, it's not. It's a completely separate thing. That makes me very, very optimistic about it too.
Yeah, the builders continue to build. The builders continue to build. The technology continues to get better, continues to get simpler. One of the big challenges with the space is just, and this was something we touched on yesterday, but I've had other conversations about it, is it's not a great experience interacting with these technologies if you don't have a degree in computer science, right? My mom doesn't have a MetaMask wallet. Most people don't have MetaMask wallets. Most people don't want to deal with it. They want it to be a Venmo-like experience or a Zelle-like experience where it's very easy and very simple. And we're not there yet. And that's interesting. That's a barrier to entry, but it's also, I guess, the opportunity for the people who figure out the way to make that user experience more, like the way we get with our Apple phones or our Android phones, right? Very simple, very clear, very intuitive. Well, we're not there yet, if we're just being honest.
And there's so much negative and about Bitcoin fear from especially the older generations. I just did a radio show, our version of NPR here in Santa Fe, and the whole conversation, which actually airs tonight, now come to think of it, was about Bitcoin. And I'm sitting there basically trying to calm down the guy that I interviewed with, who's talking about it as a hoax and all these other things, and makes no sense to them whatsoever. So yeah, there's mass adoption, but there's still a long way to go.
Yeah, that's very well said, and it's definitely intergenerational. And by the way, are some other trends as a gaming, for example, the immersive experience. Do you know? I don't have the statistic ready to hand, but the amount of global revenue generated by computer gaming is higher than film and music combined. Think about that.
Yeah, it doesn't surprise me though. Really doesn't surprise me. And maybe they're somewhat even interrelated. I don't know, but I can see where kids that are sitting and gaming all day may also be, streaming music at the same time. I don't know if
And
there's some cross current, but it came to my mind.
and trading God knows what digital asset on their Robinhood account on their phone while they're playing.
Exactly.
Listen, I wanted to touch on something else here, from the ridiculous to the sublime, to go to the other side of the spectrum, and talk a little bit about gold, which obviously has a lot of people's interest right now because of the price action. I can see it looks like Brian Caputo, our producer, has put that chart up in the upper left-hand corner of the screen. I know it's gold because it looks like a ski slope.
Well, I'm not to toot my own horn, but I have been bullish gold for years now and had predicted that it would double 3 years ago. And it was just around 1,500 then. So yeah, that happened. So the question is what
Boy,
happened?
you nailed it.
I did. And it was for all the reasons that we've seen. And so, it doesn't matter. At that point, we were in a different administration, and now, we went from a Biden administration to a Trump administration. But a lot of the things that were still a factor, and I know the market's super focused on tariffs right now, and we mentioned some of the other issues, but geopolitics is another one. The debt is another one. These things are real. And so I could see those things emerging for years now, almost in a chaotic situation where the flight to safety to gold was the only thing that people could go to with any assurity that they would be protected. Certainly central banks were doing that. But the question is, do we need that same flight to safety, or even that has maybe reached a peak? So what does that mean for gold now? Does it go from a flight to safety asset to an inflation hedge asset like we saw in 1979, 1980? And that's why it doesn't really matter to me right now what gold does. Obviously, I shouldn't say that. Maybe it does matter, but not as much to me as what silver does at this point. Because silver really is, when they say it's the poor man's gold, it is. It's trading between $34 and $35 an ounce right now. It is not, the gold to silver ratio is at 90, which means gold is 90 times the price of silver. And it's super important to watch, because if silver starts to outperform, and when I say outperform, even start to rally versus the gold, and we get the ratio down to 80 or even drops further. And by the way, in 1980, the ratio was 17 to 1. Just shows you how much room there is.
Wow.
Then I would say gold could go up, and probably will. Bless you. Gesundheit. But it will be silver that will really be the exciting thing to watch. So yes, we've been long silver. Unless it really breaks down, let's say under $33, then I would throw in the towel. But if we can get through 35 in this environment, where we still don't really know inflation and what's going to happen, part of the inflation of the stag that we talked about in the beginning, then I would go with it. And then, like I said, gold will hold over 3,000. May not get to 3,400, but it certainly won't break down. Silver, though, can go to 50.
Really, really interesting. In terms of that ratio, is this just a sense of just gold? I mean, obviously, when you look at the gold chart, you can see it. Gold just running out ahead in terms of the price action, the momentum to the upside.
Well, yeah, I mean, like I said, gold has ran out ahead for really very fundamental reasons, as not just to mention the uncertainty that we talked about even before tariffs came into question, but the uncertainty of what happens with the dollar. The lack of foreign investments that we're having. China announcing that they don't want investors in the U.S. right now. Don't stop investing here. What's happening in the European Union, the Russia-Ukraine, now the Middle East. That's why gold went up. It didn't go up because it was worried so much about inflation running out of control. But that was in the background. Now it's more wait and see. If there's going to be inflation, I have that trifecta. So trifecta, one is the silver to gold ratio, where silver starts to outperform. The dollar is still pretty strong, so the dollar would have to show a lot more weakness. And if we switch over to other commodities, of course, we would have to see the sugar and some of the grains start to pick up. And sugar is outperforming the grain market right now, but it still has a ways to go to prove that we should start really worrying more about this inflation problem as part of that stagflation.
By the way, just an observation. I'm looking at it with this conversation here and some of the points that we've both made here today. If we look at that gold chart just one more time, this is what's fascinating to me. Obviously, these stories can be very narrative driven. Lots of passion on both sides of the political and geopolitical debate. Whether you loved or hated President Biden, whether you loved or hated President Trump, whether you love or hate him again now. Looking at this chart, show me November 5th on that chart. Doesn't matter. These are broad secular trends. And that, as you nailed that doubling of the price of gold. And there you see it. You see that despite the noise, despite the emotion, despite the narrative, despite the passion over politics that we have in this country, these are broad secular trends that are not about one man or one woman or one administration or the other. These are broad secular trends. I mean, this is just a
And that's so well said, Ash, because I've been doing this for a long time. I have seen lots of administrations through the years, and I've traded through all of them. And what I learned on the commodities floor back in the day is that you never trade with your politics, number one. That's dangerous. And number two is you almost have to disassociate from all of that noise. And that's, back to what I keep saying, and now probably for the fourth time I've said this in this interview, is the price will dictate the narrative. And gold definitely had a narrative based on the price. And now the rest of the market is having a narrative based on the price. I don't care if it's a Martian in the government right now. I will always look at things the same way. And we've had a secular bull market in the metals, and now we're in a bear market or close to a bear market, not every sector, in the overall equities. And what does that tell you? Until that changes, that's where we're at.
never ever trade your politics is some of the best advice you could ever get. Boy, but do you remember, that reminds me, thinking about the 2008, 2009 period. Do you remember all those guys going on CNBC and Bloomberg, foaming at the mouth, apoplectic, talking about how stocks had to crash? There was just no way they could keep going this way for the next 3 weeks or 3 days or 3 hours because they insisted, they had this fundamental belief that it was just wrong, that central banks were doing symmetric asset inflation, and they just couldn't continue. And it did continue, and they lost their shirts.
Yeah, and also at that time, by the way, there was actually post-traumatic stress by a lot of financial people, financial analysts, financial planners, who essentially stayed out of the market. They missed that spectacular bottom in 2009 and didn't get involved till about 2015 because they were so afraid that the rally couldn't last. So you're right. That is the classic example. It's also a classic example of how bearishness, which is despair, but we humans so readily are hopeful species, how we turn from despair to hope, and how hope becomes contagious and then becomes, more optimism. And then, of course, euphoria, which, of course, then turns back into caution. That's just the cycle of the market. It's also the cycle of human nature.
Yeah, Mitch, that's so well said. We're always delighted when you join us here on Real Vision. I know we've run over time, but we had so much to talk about. But I do want to give you an opportunity here to give final thoughts, key takeaways for our listeners and our viewers.
Well, since this is, for me, all about making money, right? I want to give one last tip. And besides watching, obviously, the silver to gold and the grains and the sugar and the dollar and the semiconductors and the retail, is look at things made in America. And when you look at the chart, look at the basing action where you have spectacular moves down, falling knives, if you will, in so many of the high-flying stocks. You have a bunch of stocks that have just been basing out. And every time we see a down move in the market, they may test the bottom of the base, but they haven't broken down below it. So there's your great risk if they do. But as they're basing, if we get any kind of equanimity in the market right now, and again, look at the XRT and look at SMH to determine that, then you have great opportunities in a bunch of stocks and think thematically, right? So think about the impact of the diet drugs and the vanity trade is what I'm calling it, which are where consumers will go as they've lost weight and continue to feel good about themselves, beauty, skincare, exercise, diet supplements, etc. Think about the base of the tariffs. Think about which companies will prosper here. We know that we saw a great move in Lucid Motors, but also Rivian. I'm still watching Intel. I'm watching Symbotic, which is a robotics company. Stratasys, which is making 3D parts for cars. All these things, if you look at their charts, they've just been sidelining. That to me is a solid consolidation. So whatever stock you're looking at, look at that solid consolidation. Think thematically. Think about commodities too, by the way, and then buy those breakouts.
Mish, a masterclass in summing it up. Nice and crisp. Such a pleasure to have you with us right here on Real Vision.
Thank you so much, Ash. It was such a pleasure to be here, and thank you.
Mish Schneider, Chief Market Strategist at Market Gauge. Thanks for coming. Thanks for listening. Thanks for watching. Have a great afternoon, everybody.